As the lines blur between commerce and conflict, what becomes of a world without boundaries? Stock market charts give way to maps of war zones, markets sway to the coordinates of missile strikes, currencies morph into weapons, and corporations transform into armored tanks. The fog of gunpowder obscures the horizon, and Vietnam's financial elite sit atop a volatile arsenal, some dreaming of grand victories, others teetering on the edge of collapse. The world stands at a perilous crossroads, with no clear path back. On one side, Washington, the superpower, pumps trillions of dollars to revive its roaring war machine. On the other, Beijing, resolute and cold, declares a destined showdown with the U.S. But has China already anticipated the script to play the final chess move against America? Notably, Washington acts as if the world owes it a historical debt, tightening the noose and leaving nations from Europe to Asia reeling in a financial maelstrom. Water, too, emerges as a spark for a silent war, with Mexico caught in a geopolitical gambit. Meanwhile, Russia and North Korea torch diplomatic legacies with ironclad threats, and the Middle East remains ablaze. Israel weaves a deadly web, poised to carve through long-standing enmities. If the U.S. strikes Iran, could that be the tipping point where the world is rewritten in bombs, blood, and the collapse of a unipolar order? As global giants don armor and march to battle, the United Nations can only cry out in despair. No one survives a trade war. But this is no mere trade war. It's a symphony of ambition, chaos, and bloodshed, striking its opening chords. Welcome to WorldView Today. President Donald Trump has once again shaken the global political stage with a sharp and resolute tone, announcing a new wave of tariffs described as a direct blow to America's economic rivals, rattling both Beijing and Brussels. Yet, this is not the loudest shot fired. America must be militarily strong before it can be strong in anything else, Trump declared, doubling down on a hard power strategy pushed to its limits. America must be invincible. A staggering $1 trillion, an unprecedented figure in U.S. history, is the price to make that vision reality. At a meeting with Israeli Prime Minister Benjamin Netanyahu, President Trump stated firmly, "We're ready to tighten our belts in every area except defense." He emphasized, the U.S. military must be stronger than ever, not a choice, but a mandate if we are to survive in a world full of malign forces. Trump's latest remarks underscore a clear priority, placing military might at the core of America's global security and influence strategy. Analysts predict the Trump administration will channel budgets into advanced weapons development, nuclear arsenal upgrades, cyber defense enhancements, and expanded military presence at strategic hotspots, moves to reaffirm U.S. superpower status in an increasingly fierce global contest. Trump's warning resonates amid a chaotic and volatile global landscape. For him, military strength is not just a shield, but a strategic counteroffensive to maintain dominance in a world slipping from the old order. Yet Trump himself is tasting the fallout of the economic confrontation he ignited. His near-total tariff on imports has jolted financial markets, with Wall Street tumbling for 3 consecutive sessions, evaporating a significant portion of his personal fortune, a steep cost for the high-stakes power game he pursues relentlessly. According to Forbes, before the new tariffs were announced, Trump's net worth was estimated at $4.7 billion now. It has shed at least $500 million. The heaviest blow struck Trump Media and Technology Group, his largest asset, which fell from $2.2 billion to $2 billion in value. His commercial real estate ventures also took a hit, with losses estimated at $90 million, mirroring declines across listed firms in the sector. Investments in housing, resorts, and entertainment projects similarly plummeted, while his cryptocurrency holdings lost at least $240 million. Trump's all-out tariff strategy not only risks inflating the U.S. economy, but is boomeranging back on his own wealth. Another name caught in the global financial whirlwind is Elon Musk, the world's richest man, facing a dramatic and alarming wealth slide. Per Bloomberg's Billionaires Index, as markets closed on April 7th, Musk's fortune dipped below $300 billion for the first time since last year, now standing at $298 billion after shedding nearly $135 billion in under 4 months, a 31% plunge that has stunned Wall Street. This is a stark blow to the billionaire who hit $400 billion in December last year. Investors and Tesla fans worry Musk is distracted from tech ventures by other pursuits. Responding to Fox Business about balancing roles at Tesla and beyond, Musk admitted to struggles, but dismissed rumors of leaving the White House orbit, with no timeline clarified by him or the Trump administration. Despite the plunge, Musk remains the world's richest, outpacing Jeff Bezos by over $100 billion. The global trade war, ignited by President Trump, has now zeroed in on one target: China. On the night of April 9th, the White House leader abruptly declared that within 3 months, tit-for-tat tariffs would spare no nation except Beijing. A calculated, precise, and deliberate move, it sent shockwaves through markets and pushed U.S.-China ties to a boiling point. Within a week, U.S. tariffs on Chinese goods skyrocketed from 54% to 125%, an unprecedented escalation in bilateral history. China retaliated, slapping 84% duties on American goods, a direct, unmistakable declaration of war. Observers warn this is no mere tariff spat. The world's two economic superpowers are hurtling toward a comprehensive decoupling, where trade is but the surface of a deeper, fiercer geopolitical chess game with no room for compromise. CNN notes this marks a turning point not just in U.S.-China trade, but in their intertwined economies, with visible economic damage overshadowed by a widening geopolitical rift, signaling the end of Washington-Beijing engagement. Nick Morrow, Asia chief economist at EIU, cautions this could be the clearest sign yet of a hard decoupling, where bilateral trade and investment grind to a halt, shaking China's economy and upending global trade order, including for the U.S. itself. Trump, however, sees China's fierce reaction as validation for excluding Beijing from tariff exemptions. China wants a deal, but they don't know how to make it happen, he told reporters. Across the Pacific, the view differs starkly. President Xi Jinping rejects concessions to what Beijing calls America's unilateral bullying as an option. Instead, he stokes fervent nationalism, turning tariff retaliation into a symbol of resistance. This is no impulsive reaction, but part of a meticulously prepared strategy honed over 4 years since Trump's first White House term. China doesn't just counter, it plays a long game. For Beijing, Trump's new tariffs affirm Washington's exhausted goodwill for talks. Yet, for Xi, this is not a shock but an opportunity. As the White House sows trade chaos, China not only holds firm, but quietly leverages instability to gain strategic advantage. Jacob Gunter, a Berlin-based Merix expert, notes Xi has long prepared for a protracted U.S. showdown, not just anticipating, but methodically planning for it. Will Trump ease up on China as he has with allies? The question lingers. Canada, despite retaliatory tariffs, secured a 3-month exemption, but Beijing gets no such reprieve. The stakes are colossal, with the $500 billion trade relationship between the world's top economies at risk. China, the world's factory, supplies everything from shoes to chips and solar batteries. But its efficient production fueled a massive trade deficit that Trump and many Americans blame for job losses. Analysts predict 125% tariffs could have Chinese exports to the U.S. in years, spiking U.S. consumer prices as replacements remain elusive. J.P. Morgan estimates Americans could face $860 billion in tax costs before full decoupling. Chinese suppliers risk collapse as production shifts abroad, with millions potentially jobless. Yet, China holds a political edge. Unbound by election cycles or voter scrutiny, its leaders can act swiftly and decisively without domestic blowback. A Chinese saying hints at Beijing's resilience. During COVID, they froze their economy, weathered unemployment chaos, and emerged unscathed. For them, the The tariff war is just another storm they're seasoned to outlast. The People's Daily declared on April 8th, "We're ready to confront U.S. tariffs." After 8 years of trade clashes, China has not only endured, but amassed rich experience in these struggles. As tensions escalate and retaliation looms, Beijing remains strikingly calm. Economist Taizhong Qian from China's People's University wrote that the outcome hinges on endurance in an economic war of attrition, with China holding a strategic edge in resilience. Beijing quietly accelerates its pivot from Washington, expanding trade with Europe and Southeast Asia, while capitalizing on growing discontent among America's allies, who chafe at the White House's erratic tariff strategy. The first U.S.-China trade war and Huawei sanctions 6 years ago were a wake-up call. Since then, Beijing has methodically diversified supply chains, bolstered economic resilience, and built defensive layers for an inevitable clash. Analyst Victor Singh observes, "China knew this was coming, and they're ready." Yet, amid criticism that America is spiraling in a tariff storm, many overlook Washington's knack for turning crises into power grabs. Post-2008, the U.S. not only rebounded swiftly, but quietly tightened its global grip. Former Russian ambassador Alexander Yakovenko revealed how Washington exploited that chaos to snap up European banks and strategic industries under the guise of stabilization. Backed by government muscle, U.S. financial giants extended an invisible hand over global economic levers. Now, in a life-or-death trade war with China, some believe that playbook is back, more sophisticated, discreet, and relentless. Sputnik reports that U.S. financial titans like BlackRock, Vanguard, Fidelity, and J.P. Morgan, controlling over $36 trillion, have quietly spread their tentacles across Europe. Backed by Washington, they wield lawsuits, sanctions, and scandals to kneecap rivals before buying them out. The result? U.S. dominance over key EU industries, turning Europe into a financial buffer, absorbing risks for America's economy. Through these funds, Washington exports inflation, liquidates toxic assets, weakens adversaries, and imposes unfavorable deals. A war without troops. Remarkably, U.S. financial giants draw power not just from the government, but from a $52 trillion private savings pool. A treasure trove funds can tap almost limitlessly. With near zero or negative real interest rates and relentless Federal Reserve quantitative easing, this capital floods markets at negligible cost. This is America's shadow money printer, a mechanism letting funds manipulate global markets, forcing the world to bow to the dollar's might without firing a shot. This week, China struck back with a white paper on U.S.-China economic ties, condemning Washington's unilateral protectionism and asserting a hardline stance. Conflict can only be resolved through mutual respect and cooperation, not coercion. The paper notes U.S. exports to China grew 648% from 2001 to 2024, far outpacing other markets, with American firms earning $500 billion in China in 2022, 6 times Chinese firms' U.S. earnings. Beijing argues benefits are balanced, urging dialogue over confrontation. It cites 3 differences: China's state-led system versus America's market model, divergent development stages, and misaligned strategic interests. Cooperation yields mutual wins, confrontation, mutual losses. A new front emerges between the U.S. and Mexico, not over tariffs, migration, or security, but water. Tensions over the Rio Grande escalate as Mexico scrambles to meet U.S. water deliveries, fearing Trump may weaponize an 81-year-old treaty. Per the 1944 agreement, Mexico must supply 1.75 million acre-feet over 5 years, but with months left, it's delivered under 30%. Mexico cites historic drought, but U.S. anger, especially in Texas, grows, accusing Mexico of dodging obligations. President Gloria Steinbaum faces pressure from Trump's tariffs and water demands, opting for talks to avert a breakdown. Disputes have sparked violence before, like 2020 clashes in Chihuahua. Water, once a resource, is now a geopolitical lever. Across the Atlantic, Trump shows no mercy. demanding Europe pay massive reparations to resume trade talks. Tariffs on EU goods, from cars to agriculture, have cost exporters $15 billion, prompting Brussels to prepare retaliation. Trump insists Europe compensate for years of perceived imbalances, escalating transatlantic tensions. UN Secretary-General Antonio Guterres warned, "No one wins a trade war, but the poorest economies lose first." Speaking in New York, he cautioned that great power conflicts could deepen global poverty and inequality. Amid tariff peaks, Trump surprised with a diplomatic gambit, offering to meet Xi Jinping, a paradoxical signal of potential détente or a calculated feint. Yet, he paired it with a stark warning. America wields unmatched weapons no one can imagine. Referencing past claims of a hypersonic super missile, Trump stoked fears of a new arms race, though U.S. hypersonic tests lag Russia and China. In Asia, China flexed naval muscle, rerouting its Shandong carrier through Philippine Straits to approach Taiwan's east, an unusual move signaling strategic adaptability. A massive Thunder Strait 2025A drill simulated a full Taiwan blockade, testing combat readiness and pressuring the island's psyche ahead of 2028 elections. Beijing aims to sway voters toward pro-unification leaders without bloodshed. Japan, meanwhile, sheds post-WWT restraint, planning its first anti-ship missile test and doubling defense spending, eyeing China, North Korea, and Russia. North Korea's Kim Yo-jong reiterated its irreversible nuclear status, rebuffing U.S., Japan, South Korea calls for denuclearization. The U.S. and South Korea updated joint war plans to counter Pyongyang's advancing arsenal, signaling preparation for worst-case scenarios. At NATO, Secretary-General Mark Rutte warned China watches Ukraine closely, with global security implications. He endorsed Trump's push for allied defense spending, urging Europe to match U.S. contributions. China and Russia dismissed Zelensky's claims of Beijing's involvement in Ukraine, with Moscow calling China a comrade maintaining balance. In the Middle East, U.S.-Iran tensions hit a breaking point. Tehran rejected direct nuclear talks, warning that U.S. military action would target not just American assets, but regional hosts like Iraq and Qatar. Israel bolstered defenses with U.S.-supplied Patriot and THAAD systems, possibly preparing a preemptive strike on Iran's nuclear sites. Trump vowed force if Iran defies demands, with Israel leading any campaign. "We don't seek war, but we won't hesitate," he said on April 9th, signaling Israel's frontline role. Israel sees Trump's return as a golden chance to crush Iran, blaming it for the October 7, 2023, Hamas attack. Iran's supreme leader Khamenei dismissed direct talks, though President Pezeshkian hinted at indirect dialogue via Oman. Russia offered to mediate, leveraging ties with both Washington and Tehran, a rare bridge if it navigates U.S. tensions in Ukraine. A war with Iran risks spiking oil to $120 a barrel, disrupting supply chains, and triggering global recession. Israel's preemptive moves could drag the U.S. deeper, reshaping alliances and empowering groups like BRICS. The Middle East teeters on a historic pivot, where old orders crumble and new powers rise. That concludes this week's WorldView Today. Thank you for joining us. Until next time.